Good morning all and welcome to today's video. So today I have two pairs on watch and those are pound Swiss and pound dollar. So I'm going to break them down for you now and start with my favorite of the bunch, which is pound Swiss. So why am I looking at pound Swiss? I am looking at pound Swiss because if we just break this down from the weekly chart, I don't have all my trend lines on the chart at one time just for simplistic reasons. If we just break this down from the higher time frame, since I only have two pairs on watch and I can do this, take a little bit more time over these pairs today, we have this 1, 2, 3 touch structure, which breaks below this low here. We break below and then we completely smash back in. This is what we call people being caught the wrong side of the market, okay? And what usually happens is that when we break such significant lows, such as this one, the media get hold of the news that pound Swiss has broken an all-time low according to my data, and then people that want to get rich quick think, oh, it's just going to keep going. If they hear something is going down and down and down, it's broken all-time lows, then people with a gamblish mindset, people who want to get rich quick, think it's just going to keep going because they don't know anything about trading, so they start selling, and a lot of them sell anywhere and everywhere because they think it's just going to keep going. And what we see in the majority of cases is it price break back above the low which it broke below. Okay, and the same applies on the flip side when we break significant highs or all-time highs. Some people might have some clue what they're doing, or might have learned a little bit about trading, and many of these people will trade something like a retest. What do we see here? It breaks below that low, pushes back up. Many people who believe that what was previously support becomes resistance once it's broken below would see this as a retest, and it goes, and so they start getting short, and then it moves to the upside. Okay, with a move like this, you potentially could have made some profit, but the point being is that from a business perspective, if you are constantly selling into the lows, so the lows being this structure here, if you're constantly selling into this lows and buying the highs, how profitable do you think you would be if you had a property portfolio and you kept waiting until price was at an all-time low before you started selling your properties and waiting for it to be at an all-time high before you started buying your properties? How profitable do you think you would be over the long run, in the long run? Okay. Probably not very. Okay, so that is the what we call mass psychology. So we've broken back above this. So because that is a completed piece of structure and we've broken back above that high now, there is no reason at this moment in time for price to be testing these lows again, test this low here, okay? And what we typically see is that the natural ebb and flow of the market is impulse, correction, continuation, okay? Now, typically speaking, we don't normally see corrections this wide, or it's not common for corrections to be this wide relative to the move up if we are going to move to the upside. But this is where experience comes in, and you have to know what you're actually trading. Okay, we are trading, or I am trading, or looking to trade pound Swiss, which is a corrective pair by nature, and it typically moves sideways for longer than a pair such as pound dollar. Okay, so we have to factor these things in. And then the psychology that I just showed you with this higher time frame structure here, the same thing happens on the lower time frame. So if I just drill down, you can see that we have that 1, 2, 3 again. We break below a sharp hook point. I've talked about previously how the sharpness of a hook point can often indicate how much liquidity is there and how aggressively we will rally if we reach that area second time around. Okay, so what happens here? We reach that area, reach that area again, and we rally with a similar level of aggression, not quite as aggressive, and that is perhaps why price has come back down to some extent, because we're always analysing the nature of the market and asking ourselves, how did price get somewhere? Did it get somewhere impulsively or correctively versus just did it actually get there? Okay, so you can see another completed piece of structure here with that 1, 2, 3 middle section within that 1, 2, 3. Now watch this, okay? So that is a completed piece of structure. You can even see within the middle section that we have a middle section. We have a 1, 2, 3 touch structure within the middle section, and a 1, 2, 3 middle section within the middle section of the middle section. Okay, if that makes sense. And if you just so that is a completed piece of structure. So it's no surprise to me that we broke below, and people who wanted to get rich quick started getting short here. Okay, because the media once again would have got hold of this and said that pound Swiss is at a, what month was that? A 1 year low. Okay, so people think it's just going to keep going. They start selling, especially if they believe what was previously support becomes resistance once it's broken below. There's the retest. Look, you can even see the price comes back up. They think this is a retest to get short. If we just drill down, you can see many of them would have thought that was a retest to get short, so they start getting short and then they get completely washed out. Okay, so this is the same psychology that we see over and over again. I've also talked about how we often get these near misses. Okay, so for example, if we we have a near miss here, okay, which is why I've put a ray line on there. So price came close to this sharp hook point there, but it didn't quite tap into it. We also have another one there. We got close to that liquidity point, didn't quite tap into it, sold off. We got close to that liquidity point, which near missed that liquidity point, and we sold off again. These often get filled because the liquidity that is sat there, or a lot of the liquidity that is sat there, hasn't been tapped into. Okay, which therefore makes this a high, makes this a high area of value. Which means that if we take out the liquidity that was sat there and we push up, the liquidity that is still sat there, that was failed to tap into last time around, may help to drag price up, so that we take out this high and these near misses, and eventually take out that significant high there that we near miss too. Okay, if that makes sense. So on the lower time frames, so there's no reason for price at this moment in time to come all the way back down to these lows, and there is more reason for these near misses to the upside to be taken out. Okay, so as I drill down, you can see that we've had a series of impulse correction continuations, and that price has left us with a footprint where the liquidity is likely sat. And why do I think that? Because we have this, we get close to this area, fairly close, we near miss it, we come back down. This is what I call the FOMO leg, okay, where we get very close. People that were waiting for price to get to this area waited patiently until it got close, and then they fear that the market's going without them, so they start getting long. And what you can see in here potentially is that 1, 2, 3 middle section within what may be, because we've kind of got a structure within here as well, which itself has a middle section. What may be happening now is we may be pushing down to take out this low that we near missed to before further continuation to the upside. Okay, and even if we reject from this high, and this becomes a middle section in itself to push back down to give us a third touch, there is more than enough profit potential up to here, which we could potentially capitalize on. Okay, so just analyzing the structure, what I'm really interested in is the fact that we have this 1, 2 potential 3 touch move, which has a 1, 2, 3 middle section. If we just measure the lengths of the impulses, because they tend to be of a similar length, if we measure the impulse from where it started to the top of the correction, and we assume that the leg out is of a similar length, and we measure it from the break, because sometimes the correction itself can dictate how far up price pushes up. That to me looks like a completed middle section, and then you can see that we tapped into this area and we found liquidity because price pushed down aggressively. You can see it's not really committing at the moment, but I'm just analyzing the waves, analyzing the structure. So with all that in the mind, and moving that paintbrush, moving that out of the way, what I'll be looking for today from these pairs is for price to push down to this area. I wouldn't be looking for a risk entry where we essentially call the bottoms from here, because obviously we could potentially come down for a third touch of this structure. So if you start trying to call the bottom by trying to get long, if price reaches this area, then what can happen is you get tagged in, tagged out, price comes down for a third touch and then goes. Okay. I personally, just because of the makeup of this, I personally wouldn't be looking for a risk entry down here, because then we're kind of outside of this structure. I don't mind taking a risk entry if we're just kind of hovering on there, but once, if we were to push down, we may be all the way down here. And I'm personally just given how this has formed overall. If this was more of pushed down like that, and we had a bit more depth to the overall structure, then I would be more likely to consider a risk entry from the bottom. But since we don't, what I'll be looking for is for price to just tap into this area, followed by a push up and a flag, and then we would at least have those three sections and that 1, 2, 3 middle section that I was talking about, and then I would look to get long on the break of the flag or within it. And of course, if we rejected from the high of this piece of structure here, if it was to form, then I would be able to manage the trade for something in the region of 5%. And of course, if we got the risk entry within the flag, that would be a tighter stop loss and something in the region of 8%, or well, we'd have a minimum 10 pip stop loss, so that would be about 7.5%. So we shall see what happens, and that is pound Swiss, and that's the thought process. I have an alert set just to see if we push down to this area by the end of the day. It looks a long way at the moment, but we have I think it's some economic data, red flag economic data coming out of the UK at 7 a.m. this morning in an hour and a quarter's time, which may give this, cause this to impulse to the downside down to this area and cause this entry to shape up a little bit more quickly than it otherwise might have done. Okay, so that's the thought process around pound Swiss, always analyzing the micro and the macro, the fundamentals and the technicals. So on this one, slightly differently. On this one, you can see that once again, as with pound Swiss, we have this on pound dollar, we have that 1, 2, 3 touch structure. We have a near miss to the upside, which I talked about will likely get filled, which I talk about often will likely get filled. We near miss to that area, suggesting that this remains a high area of value which price could tap into, and which, now that we've broken below here and caught people the wrong side of the market, as we often do, okay, we break below, people think it's going short, it's going to the moon, or whatever the flip side of the moon is, we come back up, okay, people think that this just move this over, people think this is a retest to go short, and they get completely washed out and it moves to the upside. Okay, so there's no reason for price to come back, back down to these areas, and because we have a near miss up there, this will likely drag price up. However, you can see that we have moved back down, and I shall touch on that in a minute. So there's no need for us to come all the way back down to here, but we may be able to capitalize on a move to the downside to take out a low, which you will see more clearly in a minute. Okay, so as I drill down, so longer term, I'm looking for that move to the upside to complete that, to take out that near miss for that kind of impulse correction continuation. But as we draw down, there is potentially a little short-term move which we could capitalize on, which is kind of congruent with what the DXY is doing at the moment, given that this is actually pound dollar. So here we have a completed piece of structure. Okay, you can see the 1, 2, 3, do excuse the drawing. We have a 1, 2, 3 middle section, so there's no need necessarily for us to come down all the way to here at this moment in time. But what you can see if you look carefully is we have a sharp hook point. Okay, we have a sharp move down followed by a sharp move up, which just so happens to be a retest of the back end or the break of this structure. So we have a 1, 2, 3 with a 1, 2, 3 middle section. Price comes down, retests the break of this, and then we move to the upside. Okay, so we don't actually trade retests as such so much, but we do actually see them. So this hook point, this sharp move down followed by a sharp move up, is an area of significance because it was the retest of the break of this structure here. Okay, which price might likely gravitate back towards before that longer term move to the upside. And one of the things that makes me think that is because we have a near miss. We have a near miss to this hook point, and we move back up in a very non-progressive way. This is not a progressive move to the upside. This is non-progressive. We have just moved sideways with very little progression, and we have a 1, 2, 3 touch structure which taps into this exchange of liquidity, and then we push down. Okay, and if we just measure the waves, you can see there. If we assume that this is an impulse correction continuation, we just measure that. You can see that we fulfilled that move. If we take it from the break, we didn't quite fulfill that. So I'm talking about the break of this middle section. We didn't quite fulfill that, but what we did fulfill, if we just measure the middle section itself, measure the height of the middle section, Okay, so from the base here to where we broke it, we did fulfill that move. Okay, almost perfectly. So there's no, that explains why price rejected from that area. And if we just drill down, so we may be able to capitalize. We have a near miss to that low and a near miss to that sharp hook point that I was talking about. And you can see that we have that impulse, we have that impulse correction, potential continuation to take out those lows. And if we just measure that, okay, we measure the impulse from the top to the bottom of the correction. Whoops, I nearly traded it there by mistake. If we measure that and we assume that the leg out is of a similar length, that would take us down to here, down to this low. And if we assume that, you know, that we also measure it on the break as well, which is what we often do, we measure it from the break, so from the low, that would take us back down to here, okay, to tap into that area before potentially that longer term move to the upside. Okay, so that's what I'm looking for. That's the thesis. And if we just drill down, what do we have? We see the same psychology here. So I'm not surprised that we pushed up, and I shall tell you why. So we had the impulse down followed by the correction and the potential continuation. Now what do we have up here? We have this hook point, price left a foot point. We had a not so much a sharp move up, but we had a bit of a move up followed by a sharp sell off. And then what happened? Price came close to that area, but near missed it. Okay, so we near missed that area, suggesting that the liquidity that was sat there, okay, is still there, or a lot of it's still there because we didn't quite tap into it. We also have a 1, 2, 3 middle section, or even if you wanted to measure it from here to here, 1, 2, 3, this suggests that this move is complete. Okay, so this is a completed middle section. So essentially, I'm looking for a 1, 2, potential 3 move because we have a 1, 2, 3 with a 1, 2, 3 middle section. Okay, so if we were to tap into these areas, it would likely imply that that 1, 2, 3 and that 1, 2, 3 have finished, and that 1, 2 potential 3 is likely to continue. Okay, so I'm analyzing where certain waves have likely finished so that I can time where I get in within something like a 1, 2, 3 continuation, if that makes sense. Okay, analyzing everything that I've learned to see. So with all what's up in there? Okay, with all of that in mind, what are we looking for? This correction is very wide relative to the move down. Okay, so that's one of the reasons I wouldn't take a risk entry from the top here. But what I'll be looking for essentially is, once again, for price to tap into this area and then for the market to show its hand. So if we get an impulsive move down, that would suggest that we've taken out a lot of liquidity here, and that the bigger players are stepping. If we get this correction afterwards, that would imply that the biggest players are stepping in, because this correction afterwards is usually the bigger players stacking their orders for the next move to the downside. Okay, and then I would be able to manage a trade such as this for something in the region of around 7%, depending obviously on the size of the flag and what entry I could get. So I'd be able to manage it down to these lows for something in the region of 7%. We may get a risk entry within the flag, which increases the risk to reward. Okay, and then of course, if we were to take out those other lows that I was talking about, the near misses and the liquidity point that we near missed to, then there would be something which, for a short term move, yields or could yield quite a decent profit potential. So once again, the economic news coming out of the UK at 7 a.m. this morning may be the catalyst which gets us up to this area a little bit more quickly than it would appear we're getting there at the moment. Or we also have some economic data, I believe it's CPI or something, coming out of the United States at 1:30, I believe it is, 1:30 p.m. UK time. So that also might act as a bit of a catalyst. Okay, so that is the thesis. That is pound Swiss and pound dollar. I hope you've enjoyed this video. I hope it has changed the way you think about the market a little bit. And I will see you again in the next video. Thank you very much for watching. Enjoy the rest of your day.